And I take the pleasure of inviting up on stage Mr. Navin Gupta, CEO, Viventium, along with Mr. K.V. Karthik, partner and lead forensic and financial crime at Deloitte. Let's give them a round of applause, ladies and gentlemen, as they're about to get on to a fireside chat on regulations and risk in emerging digital asset class.
I think everybody's leaving, so Karthik, it'll be just you and me in the room talking to each other. How does that sound?
That's what it looks like.
Cool. Let's see. How do we do this? Should we start? Yeah? Okay, perfect. I think if anybody wants to know about digital assets, which is called cryptocurrencies, we'll be happy to have a chat, and this may pique anybody's interest to be able to come back from the door back to the audience, right? So we'll do this in a fireside chat, or Hindi mein jisko bolte hain, guftagoo style, right? So it's just me and Karthik. We'll shoot questions at each other and we'll answer those as well, right? So first, Karthik, to lay the sort of the groundwork for everybody, could you explain what is digital assets, cryptocurrencies, and also just the regulations around that, so that we essentially bring all the audience towards one single place?
Sure. Thanks, Navin. There has been a lot of excitement on digital assets, especially because of the growth that you have seen over the last few decades. Before we dwell into the regulation, we need to understand the different types of digital assets, and simply because the regulations are evolving around the types of digital assets. So, for example, when I look at digital assets, I probably look at number one, cryptocurrencies, which everybody knows about it. You have NFTs, you have digital tokens, you have the central bank digital currencies, CBDCs as they call it, and as well as the stable coins. What differentiates different products are primarily the characteristics of those products, the structure of those products, in terms of how it leads to anonymity, the volatility it provides, or the stability it provides to that product, and of course how it is managed or operationalized in terms of decentralized. Do the regulators or central governments have any oversight on those products? So depending on that, what we did was, if you look across the regulations, let's say from APAC to Europe to US. US, I'll come to it at the end separately. So you have the Financial Services Authority in agency in Japan, which is actually actively regulated and come out with regulations on cryptocurrency exchanges. But if you look at China, probably it's banned most of the crypto mining, trading, exchanges, but it's come out with CBDC, the yuan currency. Similarly, if you look at Singapore, you have them coming actively promoting the tokenization of payments and how do they manage that. Recently you have MICA in Europe, which has come out with some significant guidelines, especially around what you call as the cryptocurrency platforms, in terms of the crypto tokens, what they are doing, assets and services, how they want to manage. And the reason I spoke about these services are twofold. One, when a regulator looks at it, he looks at it from four angles. He looks at it from an investor protection, he looks at it from financial crime and market manipulation related issues. The third is in terms of how it will affect the customer data protection and privacy related issues, besides others. So if you look at across all these jurisdictions which I spoke about, and I'll come to US separately, you will find a lot of clarity in terms of the guidelines that they are providing between the different asset classes. For example, if you look at the core components, that's in terms of licensing, in terms of the regulatory guideline, in terms of reporting, in terms of AML, CFT guidelines, in terms of your corporate governance and market manipulation. For the tokenized financial instruments, if I can say, obviously you had they have evolved from a traditional financial ecosystem. They just need to get in more guidelines in terms of your how they are managed in terms of the digital platform or the blockchain platform, DLT platforms. So they are the most, what should I say, most of the regulators are comfortable with that and have guidelines around that. But if you come to an unbacked digital asset, you have Japan, probably Singapore to some extent, and now even the EU, which have come out with the guidelines where they have provided, and they have identified areas specifically with the mega regulation. They have identified the custodians and probably your what you call as the brokers, who will probably be the gatekeepers for entry into the financial system, has to be the prime people who will be responsible for it. But similarly, if you look at the stable coins, Japan has led the way, and now with EU following up. The only question is left with US. It's still legal. There are multiple regulatory agencies which govern or probably regulate them, whether it's FinCEN, whether it's SEC, whether it is in terms of the CFTC and others. What interesting in May 24 this year, they have passed a new act called as the FIT 21 Act, and what it will provide is probably it will provide more harmonization in terms of who will govern the digital assets, how it will be governed. So we believe that should also get avoided. This is a quick overview of what all we see in the regulations. But having said that, if I may ask you a question, what are the when we talk about digital assets, cryptos come to mind, virtual assets, whatever we call it, the biggest concern that everybody talks about is the risk related to that asset. So what's your view on that, Navin, and if you have some examples to support that?
Yeah, thank you very much for that, Karthik, right? So if anybody has any questions, because we are a small group, just raise your hand and we are happy to take questions in a minute, right? So generally, if you look at the media, digital assets or cryptocurrencies or Bitcoin, which a lot of people use interchangeably, most of the time there is always adverse media, right? People talk about boss, ransomware में ये इस्तेमाल हो गया, colonial pipeline में ये hack हो गया, यहाँ पे problem हो गई, वहाँ पर ये problem. Generally, there is a lot of huge amount of negative association with the media. Why is it, right? So just let's look at a few kind of risks, right? So the first top, like it happens in any asset class, is market manipulation. Right, pump and dump schemes going on. You must be seeing a lot of meme coin craze going all over the world, and billions of dollars being raised at a very, very high valuation, and then suddenly the token falls, and somebody runs away with your money, or essentially manipulates the market to essentially do those boom and bust cycles, right? Very, very simple, right? Then there is risk around tax evasion. We can call it anti-money laundering. This happens in NFT lots of times. It's called wash trading as well, where somebody increases the value of a particular NFT artificially or decreases it, either books a loss or books a profit, and then essentially does tax evasion, or is able to send assets for which the value has increased without paying capital gain from country A to country B, right? So lots of around that evasion happens as well. The third kind of risk is terrorism financing, drug dealing, prostitution, or lots of other services where enforcement, that means law enforcement, police service wants to just constantly keep watch out that illicit actors are not using cryptocurrencies or digital assets as a form of payment to essentially then to be able to make use of that. And then the fourth part, which I want to speak about a little bit later, a little bit now with a particular example, is consumer protection or customer protection, right? Where you have given an asset, so the gentleman here who's sitting in front of me has put his assets either to the cryptocurrency exchange or a self-custodian wallet, but he gets hacked. Either he gets hacked at an individual level, or the custodian or the cryptocurrency exchange whom he or she has entrusted their funds to gets hacked, and essentially the money essentially goes away, right? So there is a fiduciary responsibility, like in a case of traditional financial system a bank has, in this case that intermediary essentially plays, right? And here I wanted to talk about the WazirX case, right? Everybody heard of the WazirX case? Only 2 people have heard of it. Nobody else is reading newspapers? Never heard of WazirX case? No? Okay, right. So WazirX, as you know, is one of the largest cryptocurrency exchanges in India. They recently had a hack about a month ago, and 2,000 crore rupees worth of cryptocurrency was stolen. Right? Still nobody heard about it? 2,000 crores? Doesn't ring a bell? Yes, most of you heard about it, right? Is anybody a victim to that? No? Anybody has? I mean, there are lots of people. I mean, it's a very high number of Indians who are affected because it was primarily Indian citizens who were essentially keeping money with WazirX, right? Or their digital assets with WazirX, right? And I'm making a light of this particular example. So I got a phone call from my Madhu friend from Calcutta. Everybody has a Madhu friend in Calcutta, right? Generally, all of us do, right? He says, boss, तूने सुना क्या? मैंने कहा क्या हुआ? What happened? The government of India को 600 crore rupees का loss हो गया. कोई उनका पैसा लेके भाग गया 600 crores. I said, come on, what are you talking about, right? It's WazirX and the customers lost the money and the 2,000 crore like worth of digital asset got stolen. But he said, but उसमें से 33% तो government का था boss. उनका tax जो मिलना था उनको, अब वो tax नहीं मिलेगा. Right? So not only the government lost money, the individuals lost money, and the total sum total to the economy was right. So 1/3 of the money would have come to the government, right? So actually everybody lost, right? So it's such a large, case where we don't know whether the money will come back or not. And there is a significant loss to the customers, there is a significant loss to the government, and there is a potential that this money may be used if there is a state actor involved or bad people involved. They will use this money for many, many nefarious things which we don't know of, right? Possibly wrong things which we don't want them to use this money for. So maybe certain organizations get funded which we don't want them to get funded from this kind of money that gets stolen, right? So now this becomes also to manage this risk, the business case, right? So as you know, for example, authorities in the US, authorities in Germany, those who watch this space, actually seize billions of dollars of digital assets that is used for nefarious services. And these billions of dollars can easily pay for the infrastructure, both for customer protection, for law enforcement, for police forces, for the regulator, to essentially then develop the security apparatus that is required to protect. So then everybody will win. So let's assume you do have a security apparatus, the customer protection will be better, the intermediaries will be better governed, and then you will be able to take corrective action in terms of taking this money back. And the return on investment is automatically there because the investment case essentially happens. And we'll have less and less of WazirX kind of cases because we have taken both proactive and corrective steps to improve that side, right? So this was on WazirX. I'll pause here. Does anybody has any questions? We have mics in the room. Karthik and me, we are again a small group, happy to answer those questions. And you guys are the chosen ones. You have chosen us, so we feel very responsible towards you. So special answers to you. Just get the bindas answers. Yeah,
we have a microphone.
Is there any way we can run a mic to this gentleman? Yeah, there. It's right behind you. And if you can identify yourself and your organization, that'll be great. Please.
Okay. Thank you so much for giving us a heads up about this topic. My name is Chintan. I represent an organization called Trade Penetrate, and we are a RegTech or a regulation technology startup. Right? My question is around governance of asset class or alternative asset classes. What is your take on the governance differentiation which governments across the world will probably make in foreseeable future around those asset classes which are backed by them and those which are not backed by them? What sort of differentiations are they going to create? Completely different platforms, different wallets? Just food for thought.
Yeah, and I'll start, and Karthik, if you can come in, right? So basically what I want to first thing say is technology should not make a difference how an asset class gets governed, right? Because an asset is on blockchain, right? It's still an asset that has been earned by hard-earned money of yours, right? And because the government is an equity partner in anything that you earn, either through capital gain tax or through payroll tax, they have the responsibility along with you to protect your assets, make sure the intermediaries are there, and work alongside you to make sure that you're essentially safe, right? So to me, most of the time, almost in every place in the world, governments are technology neutral, right? They're essentially saying, hey, there is a value that person X is ascribing to, and then we need to make sure that there is an apparatus that essentially exists. Now, the question behind your question is, there is CBDC, which generally will operate within the national border. So of course the government has a lot more control, right? Automatically, because they have the key to switch off and switch on CBDC, whereas, for example, in a case where the asset class is global, right? So, for example, let's take example of stablecoin, which may be US dollar pegged, which may be AED pegged, Euro pegged, or what have you. The local government, let's assume in this case, Indian government or a Chinese government or a American government will have little control because the asset has been issued outside. And that's where collaboration needs to happen. And that's the reason if you look at G20, G7, they constantly want to come up with a common framework through some of these assets can be regulated. And the last thing that I would say is, even if the regulation is not harmonized, but at the national level, the licensing framework is there, like, for example, it is for banks. I'm not saying apply the banking framework. Automatically, you will at least within the national borders, you start to get some regulation that essentially can govern these. Karthik,
if I can just add to that, see, the basic, if I can say, the concern for a regulator used for a digital asset are twofold. One is the global nature of a digital asset, including enforcement and compliance, because it is spread across jurisdictions. That's number one. The second, obviously, is that the need to protect consumers, especially, and maintain the financial stability of the ecosystem, what they're working in. So what's happening is, that's why I said, at the moment, you will find different asset classes being monitored differently or regulated differently. But there are global bodies, including, for example, FATF came out with some guidelines in 2019 itself. Now you have this International Securities Organization coming out with guidelines, which they are actually providing to the regulators, saying that why don't you have a common framework to monitor that. So once that starts evolving, probably you will see more and more asset classes being regulated and monitored, rather than probably a ham-handed approach that you will see, depending on the asset class.
So follow up on that.
We'll just check if there is any other question. If not, then we'll go to your follow-up question. Anybody else has a question? Any hands going up? We can get a mic to you very, very quickly. No question. Please go ahead. You are the lucky one today.
Okay, thank you. Do you think, in terms of the common consensus, there could be a common consensus on two things? One is the legality around, because some countries call the alternative assets as legal or illegal, at the same time around taxation, right? These are the two biggest things where countries disagree on alternative assets, right? Some of Dubai might say, or UAE might say something else, or Singapore might say something else, and India might say something else. I think that's the main point of contention. Do you think at least there could be a high-level framework amongst countries that, okay, this is how we are going to talk about it? That's pretty much it.
So I just want one thing to be clear to everybody. Everybody agrees that the tax needs to be paid, right? I think there is no country in the world which is saying, hey boss, make money, tax doesn't need to pay. So there is consensus across all tax authorities, not just in digital asset class, but all asset class, right? To say, boss, hamara tax, pay karna, hai na? Only there are two things certain in the world, death and taxes, right? So we are clear. So there is the universal truth that essentially comes out, right? So what I would say is this consensus is an evolving consensus. Right, like you rightly said, I think there is a different definition. Sometimes is it a commodity, is it a security, is it a currency, right? And once we have common definitions, that will come together. But I would say the first step still will be in the national borders, right? For China to decide, for India to decide, for Japan to decide, for the US to decide within their national borders. How do they want to treat a CBDC? How do they want to treat asset-backed tokens? How do they want to treat tokens which have no assets? How do they want to take real-world assets? So you may have seen Nandan Nilekani yesterday launched the Fintech, right? In which there was a talk about real-world assets. That means, for example, gold. For example, this building can essentially be tokenized and put on the blockchain. And that's an easy part because the technology can do it. But what would this asset be represented as, which SEBI recognizes, for example, or SEC recognizes, for example, in the US. And that debate is still ongoing. But to my mind, we are coming towards the end of the debate in almost every single jurisdiction around the world. Yeah, if you want to add anything.
Just one point. I mean, I won't get into the legality, whether it's legal or illegal, but probably the biggest question is in terms of tax evasion. That's what you're talking about. And that has been a concern. It used to be in terms before you had this global tax-related acts like FATCA and all coming in, right? Similarly, if you see OECD and other countries have started working on reporting for digital assets as well. So tomorrow when that reporting starts coming in the evasion and the comfort of the other regulators in terms of regulating these assets will become much more easier. That's my initial view.
So let's move a little bit, right, in some of the use cases of digital assets. Karthik, so I mean, you speak to tons of customers, you hobnob with regulators around the world. What are, and of course you are an avid reader and follower of this space, what are some of the use cases that you have seen? And after you, I will add in as well for digital assets. Yes, please.
So, yeah, I mean, to be honest, I think sky's the limit for it. So, we spoke about Fintech, but let me take some very basic examples. Some of the common issues that we face is blockchain real estate, for example. The biggest problem is to ensure that the chain of custody is followed, everybody is assent to it, and the number of documents that are involved. If you have that tokenization of those real estate assets, it can become a big area. I know in the banking sectors, there are certain banks who have started looking at using this technology to ensure compliance with trade finance processing, simply because it involves multiple handouts, multiple documents. For you to verify that, it becomes difficult. So they have started experimenting on that. There are certain banks who are doing it within the bank, but some of them have started making it much more open for between banks to do that. That is something that I have seen. Again, sticking to banking and securitization as an individual as well, if I look at it, loan origination and should I say as securitization. If I have this real estate tokens, if I can digitize my asset, it becomes easy for a bank to monitor it, to register it. The issues related to probably double pledging of those securities can be monitored. So that's why I said, there are numerous use cases that I can talk about. It's just that we need to start looking at how to do that and make it important.
So let's take some practical examples. How many of you think that this convention center is a good facility? Right? Lots of you do, right? Let's assume you wanted to invest 1 rupee in this convention center and get a rent based on the usage from it. Can you do so today? The answer is no. Right? We are not able to because this is owned by Reliance. But let's assume Reliance was to say, hey, let me bifurcate this convention center into 1 billion. I'm just using it up. 1 billion units of 1 rupee each. And it's a token that you can essentially go and buy from NSE or one of the exchanges. And if she wants, the lady who raised their hand there, to say, hey, I want to invest 1 rupee in this real estate project, right, or in this convention center. Now suddenly you are a holder of a right, and of course you are based in India, but you could be a Japanese person, you could be an American person, you could be a Chinese person, you could be anywhere in the world, and you could invest in your local currency and a holder of a token for the convention center that you're sitting in here, and then you essentially get a return on the back of it, right? And this is something that is very central to any economic ecosystem. So one is liquidity, right? So you are increasing the total number of participants you can essentially hold, and then second, you are essentially reducing the amount of money each individual can pay. That's the reason we have splits in shares. If a share becomes 1,000 rupees, you essentially split it into 100 rupees to make sure that it becomes affordable, because at 100 rupees somebody can come in and invest, right? So same thing can happen for a lot of valued assets which today are not liquid. They can move from illiquid to liquid, right? Let's take a second example of stable coins. And this is a true story. A friend of mine runs one of our very large safari services in Africa, right? Lots of you probably have already been to a safari, right? And he would have people coming from overseas who essentially want to take those safari services. Today, whenever the wire transfer will happen, it'll sometimes take him 1 week to receive that US dollar wire transfer in the country in Africa for them to be able to offer safari services. But now, he has allowed those customers to pay via USDC and USDT, which is a stable coin, a US dollar backed stable coin. And he receives the money instantly, he's able to issue a confirmation to the customer, and the next day, the customer can come and enjoy the safari. So suddenly, a cross-border payment, which used to be huge amount of friction, which take between 3 to 7 days, and also for which he will have to pay sometimes between 100 to 500 US dollars for receiving a $5,000 payment can essentially be received at zero cost, right? So payment is one, cross-border payments is particularly one big use case that I essentially see on the practical side, people essentially using it. And I know the third one that I'm going to say is going to be a little bit controversial. Does anybody know which is the biggest option market in the world? Trading options, share options. Anybody knows? India. And do you know why? Why do people trade options? Speculations. They want to make money. Arey boss, dhanda ek ka char karna hai, right? Ek ka do karna. And I know everybody looks at it. Oh, Baba, speculation. No, no, no. Ram, 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 ram. I won't do speculation, right? But speculation is an inherent way for people to essentially choose to essentially increase or profit from asset class. Profit is inherent to businesses, profit is inherent to individuals, and speculation is a big use case for digital assets, for Bitcoin, for Ethereum, for lots of other digital assets. Right or wrong, that's a different case. Like in the case of options, right or wrong, that's a different thing. But the point is, speculation is a big use case which a lot of people essentially decide to use and decide to make money. So again, I'm not going after the morality of it, it's right or wrong, but those instruments need to be available. If it's available to an American, if it's available to a Japanese, then it should also be available to an Indian to essentially have their right whether they want to use it for speculation or not, for example.
That's why we have investor protections, right? Okay. Anybody has any questions, last questions before?
After the speculation use case, I should think the room should warm up a little bit. No? Any question across the floor? We have mics there, so somebody can just come near you. Any question that you have? There's somebody who has a question there?
Anything? Okay. One last.
Don't worry about it. Tax authority is not taking your photo. Questions mein tax nahi hai. It's absolutely fine. Then there's also no GST on questions as well. There's GST on everything else, but not on the questions. All good? So maybe I can ask you a question, Karthik, right? So if you think about businesses, right, in general, right, and I know we talked about individuals a lot. On businesses, what are some of the use cases that come into your mind, some of the opportunities that come into your mind that you think the business can be prepared for that in the next 4 or 5 years that they can benefit from digital asset class?
So that's what I was speaking about when I spoke about banks in terms of the trade finance, what they can do in terms of, we have seen a lot of use cases, especially in the art world that's happening, where individuals as artists or as what do you call as a museum, using digital assets to actually still make money because they rent out that whatever the paintings they have as assets which you can make money. But what I found interesting was what Mr. Nilikan was talking about on Fintech. So in fact I wanted to ask you about.
Let me ask, did everybody see Nandan Nilekani's speech yesterday on Fintech? Yes, lots of people did. Yeah, please go ahead, Karthik. Yes.
I wanted to ask you on more your views on that.
Yeah, absolutely. So what Nandan essentially said yesterday on the Fintech was, let's assume there are today multiple payment rails based on asset classes, right? So the way people buy gold, the way people buy shares, that is securities, the way people transact currency. But at the end of the day, these are all stores of value, right? The 1 rupee note in this gentleman's pocket is a store of value. 1 gram of gold is a store of value. When I say store of value, it has value in it. A share of Tata is a store of value. If we were to tokenize these, and again these can be tokenized by the issuer itself. So for example, the Royal Mint of Canada could decide to tokenize gold, Tata's could decide to tokenize their share, for example, and the Indian government could decide to tokenize CBDC, the rupee as CBDC, right? Then these things can be interoperable. They can essentially move from person A to person B a lot more easily, faster, removing the friction, and the interoperability would happen, right? And when this happens, when you essentially make assets interoperable, when you increase their velocity, then there is a immediate benefit to the economy. Can we just look at how the benefit of economy happens? Has anybody heard the concept of velocity of money? And in this case, I'm using it as velocity of assets, right? So let's assume, I mean, I don't know if you guys remember, but before NEFT was there, it was not 24/7. If let's assume your payment was due in 30 days, that means your buyer will pay you in 30 days, you will get paid in about 32 to 33 days. Because by the time you put the check in the bank and you get credit, it will be about 33 days. That means you used to lose 3 days in every single net 30-day cycle, right? But now you get the money immediately. That means the buyer pays you in 30 days, you get paid in 30 days itself. That means in a 12-month period, you used to lose 3 into 12, 36 days worth of working capital. Now, that has been eliminated. That means you have got 1 month extra working capital as a business, which you were earlier losing in this friction. So your money can rotate, or your goods can rotate 13 times versus 12 times. So just by improving the velocity of money, you have additional almost 10% better return on your working capital. So the money is working harder for you. Now, if we take it at the GDP level, right? Let's assume the GDP of India was $100 at that particular point. Now, just by improving the velocity of money, you're able to get 10% better return on your GDP. The GDP can essentially become 110. I'm just talking about a small ecosystem. So the velocity of money has a direct impact on what value you can derive out of that asset. Now, similarly, if you can do this for gold, you can do it for securities, you can do it for many, many asset classes, and you can make these asset classes interchangeable. This can essentially create a big boom in the GDP of a particular country, or whichever set of asset classes that we essentially decide to interoperate under. Because now your home can get converted into a working capital line. A working capital line can essentially allow you to access lots of other opportunities which are essentially today not available to you. And this is what Nandan was talking about in terms of the potential of internet that can change our lives the way they are today. Right? Karthik, any last comments from you? I know we are almost up to time. So the gentleman on the right is already here. So please go ahead.
Really, I mean, this is an interesting field, it's an evolving field. It's just that everybody is looking at a wait and watch approach in terms of the risk that they have, and looking at what others are doing to see the maturity of each jurisdiction, how it's happening, the international bodies coming together. I think it's going to be an interesting one, and I think there is no way in terms of digital assets not growing, right? So regulations will come, it's just that the maturity will take a little time.
So Karthik, first of all, a big thank you. As a lot of you may not know, but Karthik is leader for financial services and a partner at Deloitte. So big thank you. I'm Navin Gupta, and you're a great audience. Thank you very much, everyone.
Thank you so very much.